Welcome to Matters Financial and Geopolitical from a Frontier. Thank you for stopping by. I'm grateful. Let me start with all the MindSpeak components to Ambassador Robert F. Godek's presentation there. We've got the presentation, the link is on YouTube. We've got the interview that I did with His Excellency after his MindSpeak session, and I've also got the question and answer session as well. My macro thoughts start with Eric Scott Hanseda, who put up this image chart of major currency pairs reacting to FOMC news, and largely seen as dovish. We saw a big rally in currencies, particularly against the dollar, but some of these, one in particular, the New Zealand dollar, is completely unwound now. Home thoughts go back to Doris Lessing. We are all creatures of the stars. At Finch Hatton there, this lovely stargazing room where you just had the open sky above you, and it really was miraculous. You could even see the Milky Way. I was filled with such a dangerous, delicious intoxication that I could have walked straight off the steps into the air, climbing on the strength of my own drunkenness into the stars, and the intoxication, as I knew even then, was the recklessness of infinite possibility. Two more: all sanity depends on this, that it should be a delight to feel heat strike the skin, a delight to stand upright, knowing the bones moving easily under the flesh. The world is only tolerable because of the empty places in it. When the world's filled up, we'll have to get hold of a star, any star, Venus or Mars, get hold of it and leave it empty. Man needs an empty space somewhere for his spirit to rest in. Political reflections. Tensions grow in Eastern Europe as Russia and NATO accuse each other of Cold War-style military intimidation. President Vladimir Putin's spokesman Dmitry Peskov, in response to NATO criticism of Russia's new missile program, said today, "It's not Russia that's approaching someone's borders, it's NATO's military infrastructure that is approaching the borders of Russia." NATO exercises have seen thousands of troops practicing sea landings, airlifts, assaults, massive maneuvers on the eastern edge of NATO's boundary. And I concluded by asking, who is parked on whose doorstep? AFG Global Strike tweeted the four Fars-Markten joined up with us the other day for these amazing shots. This is from these operations that NATO is conducting. Interesting sentence that I saw in Asia Times. What started as a Saudi-funded campaign to dislodge Assad from the seat of power in Syria has now morphed into a serious threat for Saudi Arabia itself. ISIS is already knocking at its doors, has launched attacks inside Saudi Arabia many times since November 2014, and now has on its agenda occupation of the kingdom itself. The ISIL, created to fight Saudi proxy wars against Iran in the Middle East, was never intended to be a violent threat to Saudi Arabia itself. It happened only when the kingdom joined a broad coalition in October 2014 to bomb the group in Syria and Iraq. Saying that, if the Saudi military orders a ground invasion of Yemen, it could see its military fall to pieces. If this happens, who will the House of Saud have at its disposal to rely on? This is the most critical issue that currently confronts the ruling elite. Although the Saudi military has the fourth largest budget in the entire world, it does not seem to have the capacity to wage an effective ground campaign in Yemen due to internal weaknesses, and I'd agree with that. That's what I've been saying for a while. The Houthis must be licking their chops at the possibility that the Saudis might come in on the ground. Mevlut Cavusoglu, was received by King Salman. This was 21 hours ago. Put up that photograph. And then Vanity Fair have a photograph of Bashar al-Assad, which I'll use as well. And the US is weighing near-term Assad military retrenchment in Syria. The US and its allies are weighing the possibility that Syrian President Assad, under growing military pressure, may soon narrow his focus on defense of more limited areas of the country, a top US general said on Wednesday. Losses in the north, the east and south have put Assad under more military strain than at any point in the 4-year-old war. General Martin Dempsey told Congress that his trip to Israel last week was focused on discussing scenarios involving Assad's departure or his government's collapse. It's generally the consensus there that in the near term it's probably more likely that the regime would go over to the defensive and limit its protection of the Alawite Shia and some of the minority groups. Under that scenario, Assad would leave the rest of Syria basically ungoverned, or governed in ways that wouldn't be positive for the region near term. US officials have previously acknowledged that Assad was under strain, but Assad has survived such pressure before, notably at the end of 2012 when the West thought his government was near collapse. But clearly he is under significant pressure, and we're 4 years down the road now since this all started. By letting Omar al-Bashir escape, South Africa has sided with the tyrants, writes Justice Malala. Incredibly, the government managed to lose the Sudanese president, insisting for hours after it took off at 11:46 a.m. on Monday that it did not know whether he had left or not, claiming that he may have gone shopping. Asymmetric warfare directed against China, Carter takes over. The point here is that China's rise is not inevitable, as many people seem to think. It depends on things that China cannot completely control, like Washington's provocations in the Spratly Highlands, which are designed to slow China's growth by isolating Beijing and drawing it into a confrontation that saps its energy and depletes its resources. There was an interesting article on the US Naval Institute's website titled Asymmetric Warfare American Style that explains, in part, what the Pentagon may be trying to achieve by harassing Beijing over its harmless land reclamation activities in the Spratlys. Here's a clip from the article. In the nuclear age, guarding the homeland from an unlimited counterstroke is about more than merely preventing invasion. Forestalling nuclear escalation means keeping the scope and duration of combat operations low enough and thus unprovocative enough that Beijing would not countenance using doomsday weapons to get its way. It is important then for Washington to limit its efforts through the type and amount of force deployed, staying below the nuclear threshold. American strategists' goal should be to design operations that insert disposal forces to support allies while making life difficult for China's People's Liberation Army. This, I imagine, is the objective of the current policy, to inflict maximum punishment on China without actually triggering a nuclear war. It's a tightrope act that Secretary of Defense Ashton Carter feels he can manage, judging by the way he's gradually increased the pressure on China and then watched to see what the reaction is. And there are indications that the Carter method is working too. On June 16, China's foreign ministry announced that it planned to complete land reclamation projects within days. And this is all about the pivot, which I've spoken previously about. I think it's an economic blockade and an encirclement. Currency markets, the euro is at 113.56, had a big jump from yesterday's low around 112.20. Dollar index last time I looked 94.08. Japanese yen is at 122.96. The pound is at 158.57. It has surged of late. Aussie, let me check, I think it was 0.07751. India rupee 63.885. South Korean won 1106.85, the Real 305.44, Egyptian pound 763.40, and the Rand was last at 12.29. I'll put up a 3-month chart of the dollar index. The point to note is that Janet Yellen holds the starting pistol, and she chose not to fire it yesterday. Eric Hanseda, again, currency futures during FOMC news. Yes, the dollar futures contract really did that. It basically strengthened and softened big time. It was quite a dramatic move. Euro dollar, I'll put up a 3-month chart of that as well. We're now at 113.60. Commodity markets, gold, when I had a check last, 1187.85. Crude oil had a wild day. Have a look at this tweet from Hanseda again to have an idea of it was up big, then fell big, and then ended up, I think, practically unchanged. OPEC revenue slumps below $1 trillion for the first time since 2010. We all know why, because price structures are so much lower. Crude oil, I'll put up a 5-day chart so you get an idea of the type of price action we saw yesterday in particular. African nations beat Yellen to raising rates as currencies tank. 5 sub-Saharan African central banks have bucked a global trend by increasing borrowing costs this year to ward off inflation and defend their currencies. They've had little success. On Tuesday, Uganda's central bank boosted its benchmark rate by 100 basis points for the second time this year. Namibia raised its repurchase rate by 25 basis points on Wednesday. Angola, Kenya, and Ghana have tightened monetary policy, and South Africa has indicated it will follow suit soon. Brazil is the only emerging market outside Africa to have increased rates in 2015. Ghana's Cedi has tumbled 25% this year. Angola's Kwanza and Uganda's shilling have fallen 14%. The shilling is down 7.2%. Some African governments have to shoulder part of the blame for the deterioration in their currencies. Razia Khan. There's been a material deterioration in fiscal policy across a number of countries, she said. Plans for increased spending and the admission of larger than expected fiscal deficits will keep up the pressure on monetary policy in order to compensate and deliver some semblance of macroeconomic stability. The model of increasing interest rates to strengthen your exchange rate can only take you so far. I agree with that. IMF lowered its 2015 growth outlook for sub-Saharan Africa by 1.25 percentage points to 4.5%. Higher interest rates may damp consumer demand and further dull the region's economic prospects. And I agree with that entirely. I wrote about this on the 8th of June, actually. Sub-Saharan African currency bloodbath. Very interesting piece by Howard French, How Everybody Holds the Continent Back. Worth reading in full. He's talking about Tom Burgess's The Looting Machine. Burgess, who writes about Africa for the Financial Times, basically is looking at narrating scenes of graft in the swamps of Nigeria's oil-producing coastal delta region, lush mining country of the eastern DRC, sniffing out corruption in the lobbies of Hong Kong skyscrapers, where shell corporations engineer murky deals that earn huge sums of money for a host of shady international players. Talking about fascinating and lengthy account of the Futunga, a shadowy clique of Angolan insiders who he claims control their country's immense oil wealth, personally profiting from it, and also using it to keep a repressive ruling regime in power. Jose Eduardo dos Santos has been president since 1979, and in 2013 Forbes identified his daughter Isabel as Africa's first female billionaire. When the IMF examined Angola's national accounts in 2011, Burgess writes, it found that between 2007 and 2010, $32 billion has gone missing, a sum greater than the GDP of each of 43 African countries, and equivalent to 1 in every $4 that the Angolan economy generates annually. Very, very interesting. I did an interview with him not too long ago. If you get a chance, do have a look at it. That link is on Rich Wrap-Ups. Corruption Global Index reveals which countries pose the highest risk. This is Verisk Maplecroft. With 45% or 33 of the 73 countries rated extreme risk in Verisk Maplecroft's annual Corruption Risk Index, Sub-Saharan Africa is identified as the region posing the highest risk to business. Its rapidly growing population, natural resource wealth have increased investment opportunities for business. The downside to this is that companies entering the region's markets are especially prone to demands of bribery. According to the 2015 CRI, the 12 highest risk countries in the world include 6 from Sub-Saharan Africa: DR Congo, Somalia, Central African Republic, Sudan, Equatorial Guinea, and South Sudan. The World Bank Africa tweeted the most common trees in Africa are fruit trees. And I don't know, but I think the Baobab is now considered a fruit. And on that note, I'll put up 2 photographs I took over Christmas. Congo, Moss Beach, and Baobabs. This is in Diani. And then also another one of the Baobab trees silhouetted against the sky. South African retail sales grew by 3.4% year-on-year in April, above market expectations. That's a bit of good news. South African all-share is up 3.66% so far this year. Dollar rand, as I said when I checked last 12.29, the Egyptian stock market is still down 4.4145% this year. The Nigerian all-share is down 3.401% this year. Dangote Cement PLC should complete a factory in Nepal by the end of 2017. It has received 90% of the regulatory approvals needed to start construction. It's going to be one of the first factories for us to build outside our comfort zone, outside Africa. The Ghana Stock Exchange is up 5.35% this year. The Ghana economy expanded 4.1% in the first quarter from a year earlier. GDP shrank a revised 3.8% in the first 3 months of 2014. And the economy grew a marginal 0.9% in the first quarter versus the preceding quarter. I like this photograph of brothers Kofi and Raja Owusu Ansah, who've established the Republic Bar, where they've resurrected the historic local brew, Akpeteshi. Looking for a third bite, Zambia said to plan raising up to $2 billion in Eurobonds. The DRC's National Assembly has passed an oil code, but the DRC only produces 25,000 barrels of crude oil a day. And returning to Zambia, yields on Zambia's $1 billion of dollar notes maturing in April 24 jumped 21 basis points to 8.03%, the highest since January the 22nd. This compares with the Nigeria dollar debt, which is at 6.79%. Its Nigeria dollar debt is at 6.34%, 6.79% Kenya, and 9.44% for Ghana. Centum reported full-year profit after tax. The group profit after tax accelerated an eye-catching 159.96%. Profit after tax up 159.96%. Full-year earnings per share up 129.95%. Group portfolio now 68.91 billion. Saying that over the last 6 years, cumulative increase in the book value of shareholder funds has been 441%. They've obviously got the big coal plant, Amu Power, Akira Geothermal, financial services. They've got a 65% stake in Keret Bank, real estate, Two Rivers, Pearl Marina Development, Vipingo, and then they've got some beverage companies, Almasi Beverages and King Beverage Limited, which is distributing Carlsberg. Very good earnings, but bear in mind there were a lot of one-off gains there. They earned 5.2 billion shillings from the sale of their 13% stake in UAP. That flattered the numbers. Also exited 2 investment funds, Helios and African Capital Alliance, reporting a gain of about 100 million shillings. Visitors via Jomo Kenyatta International Airport hit an 8-year low. This is a story in the Business Daily. And at the end of the year, I wrote about this as tourism will need a calm 2015 for full recovery. The tourist economy, which is worth well north of $1 billion a year, and I was experiencing at that period at Swahili Beach Hotel, is going to remain a drag on 2015 GDP, I said. We have a fabulous offering, but it has been shot down in the insecurity crossfire. Israeli prime ministers would always talk of a period of calm before entering into any negotiations with the Palestinians. The tourism sector needs a 12-month period of calm before it can recover, I said. Places that depend on tourism, for example, are particularly susceptible to perceived instability, writes Nassim and Taleb in his article Calm Before the Storm, why volatility signals stability, and vice versa. The key words are perceived instability. It's all about the perception. We live in an always-on 24-hour world. I have yet to see the plan which bends the perception curve. On that note, I'll put up a photograph of Ali, the navigator, who navigated us to Bassini Island, and one of Finch Hatton's, the spa, which is parked right on the edge of the property, open to the wild. It has this extraordinary feeling as you sit there. Kenya shilling 97.898. Nairobi all share positive 0.079% year to date. NSE 20 down 6.298%, but up 45.47 points since the 11th of June. An investigation by Human Rights Watch and the Kenyan Human Rights Commission claims that the police arrived some 12 hours after the first shots were fired. This is referencing a previous attack. The Nairobi Securities Exchange has been on the mend since Friday, been trading more constructively since the budget. All very nascent, but the trajectory has definitely improved. Yesterday, the all-share firm 0.085%, NSE 20 firm 0.36%. Williams & T has rallied 39.61% over 3 sessions. Limuru T rallied 8.75%, up 33.98% in 2015. Post Rio Vipingo, I had expected a sharper positive spillover into prices, and I think it's finally happening now. These companies have very, very valuable balance sheets, and if they have a more proactive policy to paying out those funds, I think you'll see a substantial re-rating. I think that's what we're currently seeing in Williams & T. Safaricom East 0.31%. Kenya Airways has rallied 16.666% this week. TPS Serena traded a big slug of shares. It's only minus 2.7% year to date, and I think a lot of the bad news has been baked into the price. Nation Media closed at a 2015 low and has slumped 29.65% in 2015. The incoming CEO, Joe Muganda, will have to hit the ground running. The board finally decapitated the CEO of Uchumi, who had become bereft of ideas as the competition started feeling up his collar. It was overdue because he had lost sight of the fact that the CEO's first duty is to shareholders, and his first duty was to people like his wife, who had supplier contracts with Uchumi. Since that announcement, Uchumi has dropped 18.26%. That was through yesterday morning. It bounced 2.79%. I think Mr. Siano was destroying shareholder value, and now that he's gone, there's room for the share price to go higher. Centum, of course, as I said, reported very strong results. BAT was the most actively traded share yesterday, rallying 4.56%. But bear in mind, it's down 19.27% year to date. Once again, thank you for stopping by.